Hello traders, and welcome to the StockGoodies Chart School. Here are 8 of the most common single candlestick reversal signals. The doji is very good for picking tops and bottoms, especially the long-legged doji. And the dragonfly doji and gravestone are also pretty good for picking tops and bottoms. Just the regular doji can mean a period of indecision, and the trend could continue after a day or so. So just a regular doji, not that great. It depends on what's behind it when you see a doji. Okay, the fully engulfing candlestick. This is a bullish green over red candlestick. The entire body of the red candlestick would fit inside of the body of the green one. A fully engulfing bearish candlestick is where the whole body of the preceding candlestick, which was green, can slide right in and fit comfortably inside of the body of the red candlestick. Now, these are very good reversal signals. The harami is the bullish harami is where the stock opens here or closes down on the day. The next day it gaps up and closes within the body of the previous candle. And a bearish harami, okay? This day the stock opened here, closed there. It gapped down the next day and closed within the entire body. You could slide this candlestick right inside the body. Okay. The kicker is where you have an open here, it closes low, then you have a huge gap up at the open and a nice run with a solid green candlestick. And the opposite is true for the kicker here. The stock opens at the low, closes at the high of this candle. The next day it gaps down, runs all the way to the bottom and closes lower. So that's a bearish kicker. The dark cloud cover is where this is a bearish signal. This day the stock opened down here and closed there. The next day there was a huge gap up, and the close right here at the low of the day or near the low of the day was below the 50% line or the halfway mark of this candle. Okay, so that's bearish. The piercing is when the stock opens high the previous day, closes at the low, then there's a gap down the next day at the open, and the top or the closing price of this candle is above the halfway mark of this candle. So that's bullish. One of my favorites is the shooting star and the hammer, and the doji, long-legged doji especially. Okay, shooting stars are excellent for calling tops. Hammers are excellent for calling bottoms. Now, the reason a shooting star is a good reversal signal at a top. In this example, the color really doesn't matter, green or red. Red is more negative or bearish. Okay, the stock opens at the low, runs all the way up to the top of the upper wick sometime during the day, and selling pressure pushes it down to close right here at the top of the candle. Now, the smaller the body, the better as far as being bearish. Quite similar to the gravestone doji. Okay, if you see one of those at the top, could be a reversal signal also. The hammer is good as a bullish signal because the stock opens here at the bottom of the body. Sometime during the day, it runs all the way down to the low of the day at the bottom of the lower wick and rallies strongly to close at the high of the day at the top of the body here. So that's why a hammer shows that the buyers were in control here by the end of the day or the close of the session. On the shooting star, it shows that the bears took over and by the end of the day were more in control. Now, one good reason to learn about and to use candlesticks is on the StockCharts.com website, on their predefined scans page. There's a link to that page on just about every page of their website. It will give you a list of technical indicators that are doing certain things, and then there's a section all about candlestick patterns. Okay, you have bullish reversal patterns, bearish reversal patterns, continuation patterns, and single candlestick patterns. Okay, the first three combine the previous 3 or 4 days of information. Okay, and they form patterns. But the reason I like candlesticks the best is the single candle patterns, where one day can signal a top or a bottom. Let's take a look at a stock chart and try to point out all of the single candle reversal signals. Okay. Now the first two, it looks like this is a fully engulfing white over red candlestick. You could slide the whole body of the red into the body of the white. Okay. Then we get up 2 or 3 days and we have two reversal signals in a row. This red one is called a gravestone doji, and the following one is a shooting star. So the stock falls. At the bottom, you have a beautiful looking doji. Okay, it's a perfectly centered doji. That can signal a reversal of trend. So the stock kind of wanders up. Okay, here is a dragonfly doji. The stock falls. You've got a doji here, an inverted hammer, then a nice white day. This shooting star right here signals reversal of trend. The stock falls. You've got a hammer at the bottom, signaling the bottom. This is also a white, fully engulfing candlestick over the previous day. The body of this red candlestick can fit inside the white. Okay, so that's bullish. The stock goes up, down, up. Not bad. Okay, it kind of runs sideways here. Then the stock falls. This is a perfect hammer at the bottom. Okay, the stock goes up for 3 or 4 days. Then you get a fully engulfing red over white candlestick. The body of the white one can slide right into the body of the red one. Stock goes down. You have another fully engulfing white over red candlestick. Stock goes up. No real signal here at the top, but at this bottom right here, this is a fully engulfing white over red candlestick. Stock goes up. Here's a doji, moment of indecision. Another doji, a moment of indecision as the trend goes up. Stock goes up, pulls back, forms another doji, which can signal indecision and the continuation of trend. The stock goes up. This is a shooting star, a bearish signal. Stock goes down for a day. You see another doji. That is, again, a moment of indecision in a trend. The trend continues up. Now we're getting to the top. Okay, this is almost a shooting star. The body is kind of big and the lower wick is kind of long, but it almost looks like a fully engulfing red over white, but it looks like the top of the body of the white is just a little higher. It was a very negative looking candlestick though. Okay, now we're getting to the top. Okay, here is first of all, a fully engulfing white over black candlestick. Stock goes up. Nice green day. Here is a perfect shooting star at the top. Okay, if it was above the upper Bollinger Band and RSI or stochastic said it was overbought, that would have been a good signal to sell. Okay, the next day it's confirmed. It's a doji. Okay, a negative doji. This is not a continuation of trend. This is a confirmation that the shooting star is a reversal signal. The stock crashes. Okay, here is a doji in a downtrend showing a moment of indecision, but the trend continues. The stock crashes. Okay, at the bottom you see an inverted hammer, 2 of them. Not quite engulfing. Okay, now the important thing about bottoms is they are almost always characterized by extremely high volume.